Imagine being able to trade on real-world questions with the same precision you trade stocks. Will the Fed cut rates this quarter? Will inflation finish the year above 3%? Will a major sports final go to overtime? Instead of arguing about it, you can buy yes or no contracts. Watch the price reflect the crowd's odds in real time and get a clean cash payout if you're right. That's the promise of Kelshi, a regulated prediction market exchange that turns events into tradable assets. Welcome to What the Asset, where we listen to our subscribers and break down everything you need to know about financial assets. From crypto and stocks to bonds and ETFs, we cover it all. So if you're into this kind of content, don't forget to subscribe to our YouTube channel. Kelshi is not a crypto casino or a token-based platform. It's a US regulated exchange for event contracts. Each market poses a clear yes or no question tied to a verifiable outcome and a specific date. Prices typically trade between 1 cent and 99 cents, and settlement is simple. If the event resolves yes, the contract pays out $1. If it resolves no, it pays $0. Your profit is just the difference between what you paid and the $1 settlement minus fees. If you've ever used a limit order on a stock exchange, the mechanics feel familiar. You place bids and offers, the order book matches trades, and you can enter or exit positions at any time before the market settles. What makes Kelshi interesting is how it reframes information. A contract at 62 cents implies a 62% market-implied probability that yes will happen. As new data arrives, an unemployment print, a CPI surprise, a schedule change, even breaking headlines, the price moves, letting you translate analysis into a trade instead of a tweet. Because the payouts are binary and the settlement rule is known in advance, you're not guessing what the market should care about. You're directly expressing an opinion on a well-defined outcome. Why does this platform deserve your attention? First, market structure. Most prediction platforms live in gray areas or use tokens and side games to avoid regulation. Kelshi took the long road, building a compliant venue and listing standardized cash-settled contracts tied to publicly verifiable data. That approach unlocks real liquidity. Analysts, quants, and even casual traders can participate without touching crypto rails, and risk teams can actually model these positions. Second, product market fit. Event markets are intuitive. Almost everyone has a view on interest rates, macro prints, weather thresholds, entertainment outcomes, or sports dynamics. Turning those opinions into transparent dollar-denominated trades gives individuals a hedge and forecasters a scoreboard. Third, data quality. Prices on active event markets can be remarkably informative. They aggregate countless small signals and update second by second. Whether you trade them or not, the live odds can help you make better decisions elsewhere, from portfolio hedges to business planning. So how do you actually use it? You start by verifying your account. This is a regulated exchange, so KYC/AML checks are part of the process, and then deposit funds via the supported rails. On the trading screen, you'll see an order book for each question, a chart of price over time, and the settlement date and rules spelled out. You can submit market or limit orders, size your risk in dollars rather than leverage jargon, and manage positions like you would any other cash-settled instrument. Because the contract value tops out at $1, your maximum loss on a long yes is what you paid per contract. Your maximum gain is the remainder up to $1. Want to trade the other side? You can sell at the prevailing bid or short by selling yes, which is economically equivalent to buying no, posting the appropriate collateral so the system can guarantee payouts at settlement. If you're coming from crypto, a quick comparison helps. On an on-chain prediction market, you're often juggling wallets, gas fees, bridge risk, and venue risk, plus thin liquidity. Kelshi's pitch is the opposite: exchange-style matching, fiat settlement, clear rules, and standardized outcomes. There's no platform token to farm, no staking tiers to unlock basic functionality, and no lotteries disguised as airdrops. It's closer to a traditional exchange experience, just with events instead of earnings or commodities. A natural question is, where are the edges? Traders gravitate toward a few repeatable categories. Macro prints like CPI, non-farm payrolls, unemployment rates, and rate decision outcomes offer clean, scheduled catalysts with data pipelines you can study. Seasonal or weather-linked markets can be modeled with public datasets. Sports and entertainment outcomes can reward fast information processing and injury or schedule analysis. And election or policy markets, when available, can reflect polling shifts and turnout dynamics. The unifying theme is discipline. Define your information advantage, size positions appropriately, and treat each contract like any other risk asset with a known payoff and time horizon. Let's talk costs and risk for a moment. Because contracts are capped at $1, position sizing is transparent and tail risk is bounded. You always know the absolute worst case in dollars. Fees are straightforward and taken at trade and/or settlement. Check the fee schedule before you start so you understand how much of your edge you need to cover. Liquidity varies by market. Headline events typically have tight spreads and deep books. Niche questions can be thinner, so patience and limit orders matter. And like any trading venue, there's no guarantee you'll find a counterparty at your price. The best odds in the world don't pay if you can't execute your plan. Who's behind Kelshi? The company was founded by Tarek Mansour and Luana Lopes Lara with a mission to make the world's information tradable. The team combines finance, statistics, and engineering backgrounds, which shows up in the way the exchange is structured: standardized rules, verifiable data sources for settlement, and a matching engine designed to feel familiar to active traders. Over the years, the platform has attracted prominent backers and talent, expanded its product set, and navigated regulatory tests, including high-profile debates over which categories can be listed. The bottom line today, it's one of the few places where US traders can access event contracts on a regulated footing. If you need a token to speculate, this is not that. If you want a rules-based venue to trade real-world outcomes, that's the point. What about a roadmap? Expect 3 broad directions. First, more depth in core categories: macro, rates, and seasonal markets with cleaner term structures and more expiries, so you can build hedges or express views at different horizons. Second, broader access, improved APIs, analytics, and potentially institutional-grade tooling, so funds and research shops can integrate event exposures into their workflows. Third, continued work with regulators on category eligibility and guardrails, so the menu of markets can expand without sacrificing clarity or compliance. As with any regulated venue, details can change. Always check the live listings to see what's currently tradable in your jurisdiction. Now, here's an important deviation from our usual crypto explainer format. There is no native token for Kelshi. That means there's nothing to buy on an exchange in the tokenomics sense, and no allocations, vesting schedules, burns, or staking utilities to analyze. If you need a token section for your template, you can note explicitly that Kelshi does not have a platform token. Trading is in dollars on a regulated exchange. If, at some point in the future, the company were to introduce a token or credit system, that would belong here, including supply, distribution, and utility. But, as of now, you participate by opening an account, not by buying a coin. So where do you get started? You sign up directly on the platform, complete verification, fund your account, and choose your first market. If you want to practice, start with tiny position sizes. Buy a handful of contracts on scheduled macro prints, journal your thesis, and review how the price moved into and after the announcement. Treat it like any other trading system. Test, refine, and scale only when your process is robust. To wrap this up, Kelshi takes a simple idea, trade what you think will happen, and wraps it in exchange discipline. Clear rules, binary payouts, transparent order books, and a growing slate of event categories turn opinions into positions and positions into measurable results. If you're looking for a token to speculate on, this isn't it. If you want a clean, regulated way to express views on real-world outcomes, it just might be the missing piece in your toolkit. So there you have it. That's everything you need to know to get oriented on Kelshi. You now have a much better picture of this platform before you start making any decisions. If you found this helpful or want more deep dives like this, drop a like and subscribe to the channel. It helps a ton. Thanks so much for watching, and see you in the next one.